Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, June 4th, 2010. Well, folks, the markets are getting rocked today. Absolutely demolished across the board. The Dow is down 260 points, NASDAQ is down 65, and the S&P 500 down about 30 points on the day. That's basically 2.75 to 3% across the board on the indexes. You can see we're getting a bounce right off one of my key master levels on the intraday chart. And I just want to scan this back and shrink this down a little so you can see how accurate these levels are. Take a look at this, guys. If you take a look, the closing low of this candle going back multiple days, we are now hitting that orange line. The tail takes you down to this level, which we may test later today. But right now, this is the initial double bottom support. Notice the bounce that you're getting off of it. Now, what's the culprit of the day as I scan back in and zoom back in on this chart? The culprit of the day, you have to say to yourself, was the jobs report and issues out of Europe. The euro is getting demolished today, folks. Take a look at the FXE. Look at this, down $1.56. The euro is now down below $1.20. That is a major break. Psychological level was $1.20. And again, being below that level is a huge, huge event here. All right, now, a couple things to go over. First of all, there actually is a little bit of a bullish pattern here developing on the euro in the afternoon session, but I would not put too much into it right now based on Friday afternoon. My theory goes as this, and I said this to the intraday stock chat today. We had a no-hype live broadcast for the Research Center this morning for a live jobs report, and I said this morning as well. I said, guys, listen, you basically have a situation where who's going to want to hold into the weekend at this point? I mean, every day there seems to be some news out of Europe, out of Asia, or out of the United States that's negative. Why would you even bother holding? Therefore, again, early this morning when initially the futures dumped, I said to the chat room, I said, guys, I expect this market to possibly go lower today, and sure enough, it has gone lower and lower by a ton. Again, this is when we were talking about it up in this range, and sure enough, look at the pullback coming back in. Now, a couple other things to go over. First of all, the markets did gap down. We talked about the levels here going into yesterday's nightly video for the Research Center. I gave them all the key levels. Then we also discussed today the jobs number. The jobs number was horrendous in my opinion. Again, the expectations were 5.25, give or take 525,000. People had all the way thought up to possibly 600,000. Goldman Sachs yesterday had come out and upgraded that number to about 600,000. So the question is, well, what happened? What happened? Well, the number came out at 431,000, and again, much less, about 100,000 less than expectations. But the kicker was this: 413,000 of those people were census workers. Those are part-time workers hired to do the census. They will be laid off, obviously, when the census is done. That is a huge issue. Because basically what you're saying to me is that the May jobs number, the max people hired, net hired, was only 18,000. That is not good, folks. Any way you cut it, that is not a good number. So sure enough, the jobs number tanked the futures. In addition, early this morning, Hungary came out and said we basically are going to default, or there's a high probability that we're going to default. That had major issues and resounding issues with the euro. Also, you had a major bank in France possibly having some major derivative losses. All these compiling for an ugly Friday. Huge volume today, over 200 million already. We've almost done as much volume as we did the last 2 days, each of the last 2 days. So that just tells you how much volume, and it's only about 2:30 p.m. Eastern time here on the East Coast. Now, sure enough, the markets are pulling back. Remember, I showed you that level below. There's a possibility you may go lower here, and I just want to give you guys that level. Volume is surging here as the markets are beginning to flush. We're just about 2 cents off the lows of the day. I'll give you guys that level. But again, if you scan back here, let's just scan back, you can see this pivot low is at 107.35. 107.35 is going to be that point of interest. Watch that very, very closely. That could be the next level that this market hits. Okay, what else is going on here, folks? Obviously, you're starting to bounce still off the orange trend line. That's the roundup of what happened today. Technically speaking, that was a horrible move to see. You saw some decent follow-through yesterday in the markets. The markets ended flat after a huge update the day before. That's what we call consolidation. Oftentimes, it can be looked as bearish, bullish consolidation, but obviously, as we're seeing right now, that has no way, shape, or form contributed to today's move. Obviously, major down. You see this white trend line? Look at this white trend line. Scanning from that pivot low that we're actually hitting a double bottom. If you take that low right down here, connected to this low and all the way through the lows from yesterday, as soon as we gap below that, that was a very, very negative situation in this market. And you see the markets again gapping down right into this level, pushing up initially and then just rolling over. Now again, I talked about that and called for the rollover because again, in my opinion, there's no one that wants to hold into the weekend, and I don't even want to hold anything into the weekend, to be honest. I have very, very little, mostly about 85 to 90% in cash at this point, and that's the safety play because again, knowing how this market's volatile, I'll scalp it intraday, I'll take a one-day swing trade. I'm not loading floating the boat on anything in this market because the volatility is just out of control. You're going to go up, you're going to go down. Ultimately, you see this market continue lower, but again, there will be major bounces along the way. We have to be ready for those and take advantage of them. Now, a couple other things. We talked about the euro. The dollar in response is having a huge up day in the UUP. I'll put up the UUP chart here. Take a look at this move on the dollar today, guys. What a move to the upside, up 25 cents. Your next major resistance is not going to come in until about 25.80 to 85 on the UUP, then $26. And that's, again, we're now hitting new 52-week highs on the dollar. Obviously, 4-year lows on the euro now, actually, which is a tremendous move to the downside. Things are just a mess across the board, folks. The oil spill continues to spill, even though they put some sort of cap over it. It just didn't honestly help very much. And there's just no good news out there. I mean, bottom line, the jobs report was the only saving grace you were looking for today, and that came out horrendous. So bottom line is, continue to be cautious, continue to be in that stationary period, look for lots of cash, hold lots of cash. Cash is a position. It's the safest position right now if you're in cash, and that's the way you have to be and continue to be in the next few days, over the weekend, in my opinion, going into next week. Overall, folks, come join the Research Center, the No Hype Live broadcast. We brought the live broadcast of the jobs report live as it happened, as the futures tanked this morning. It was an awesome broadcast that's included in the Research Center along with everything else, posted hot charts and alerts, pro trader watch list, you name it, it's there to be had for $49.99 a month, or join the chat room for live commentary all day long while the markets are open. Take care, folks. We'll talk to you later.